and welcome back. This is Stock Brock. Today I am diving into a company that we all pretty much know about if we're investors. This company is Charles Schwab. They just delivered back-to-back record quarters and continues to add clients at an impressive pace. After the recent dip, Schwab is off the recent highs, all-time highs, about 7%. I believe we're at 92.24. I think the all-time highs were around 99.54. So after the recent dip, could Charles Schwab, ticker SCHW, I don't have that one memorized, could it offer real value for patient investors here? Let's break down the year-over-year growth, financial highlights, and the impact of the TD Ameritrade acquisition. The latest earnings for Q2 2025, Schwab reported net income of $2.1 billion, up 56% year over year. Wow. With adjusted EPS of $1.14, also up 56% from last year. Quarterly net revenues jumped to $5.9 billion, a 25% year-over-year increase. The pre-tax profit margin skyrocketed to 47.9%. That is pretty impressive, up from 37.2% a year ago. And return on equity reached 19%, up from 14% in Q2 2024. Based off of those numbers, I have no idea why I sold Charles Schwab. Didn't keep it, didn't do enough research on the company. This is why you need to do your research and know your companies that you invest in, because stocks like this is just flying right underneath you, and you never even know. Account metrics also surged. Core net new asset inflows totaled $80.3 billion, 31% year over year. And Schwab opened over 1 million new brokerage accounts, an 11% increase over the previous year. Total client assets reached an all-time high of $10.76 trillion, up 9% year over year. And managed investing solution net inflows also soared to 37% year over year. All these numbers sound great, but you want to look at the balance sheet and the financials. So let's check out the balance sheet. Balance sheet strength remains a highlight, with total assets of $459 billion and a common equity tier ratio of 32%. The company's net interest margin ticked up to 2.65%, and an asset management administration fees increased 14% year over year to $1.6 billion. Overall, financials balance sheet is pretty strong for the company. The TD Ameritrade acquisition is fully integrated, powering Schwab's ongoing digital push and bringing in millions of new customers through popular platforms like Thinkorswim. Schwab now serves over 37 million brokerage accounts, continuing a trend of double-digit new account growth every quarter. So this is something to watch. Thinkorswim was TD Ameritrade's basically trading software, trading platform, and it's really strong. I like to use it. I know a lot of people that like to use it, and Schwab that's their platform now because they acquired TD Ameritrade. So I think this is a really strong driver for the company to attract new investors, because a lot of traders also use that platform on YouTube, social media, stuff like that. So could be a strong driver. All the financials and numbers look great. Did my research on this one a while back, but might have to do a little bit more research on this one. Valuation and its peers, Schwab trades at a forward PE of about 21x, EV to EBITDA around 35.8x. While those figures match a premium for industry leader, Schwab is now growing faster than almost every major brokerage and bank peer, closing the valuation gap with historical averages as earnings and assets ramp up. And this is pretty asset heavy business. So kind of hard to compare ones that are a little bit smaller, but yeah, that's something I would want to do research on, is try to compare another brokerage that is as big as Charles Schwab and see how the valuation and the price targets look. Wall Street does see some upside with the average 1-year price target of 101 to 102 range and sees highs as much as $131. Persistent double-digit asset and earnings growth, synergies from the TD deal, and aggressive capital returns make Schwab a top watch in the sector. So let's take a look from current levels. I have a 1-year price target of 107. That'd be about a 17% return. Say if we go up to 101 or 102, that'd be around a 10% return. This one is gonna be a sit and watch for me, but it's definitely gonna be something I want to add to my watch list. Not financial advice. Do what you want with this one. Bottom line, Charles Schwab is a strong company, firing on all cylinders, posting double-digit growth in nearly every metric that matters, solid financials, ongoing acquisitions, analyst optimism, combined to make SCHW a name worth considering on this dip. This is, again, not financial advice. This is Stock Rock, and peace out.